Hey, hi, this is Krubakaran Rajendran. Welcome to another video with Trading with Grow. In this video, we're going to talk about what are the commonly used chart patterns and how do you take trading decisions based on this widely used chart patterns. So that is what we are going to talk about today. So there are numerous chart patterns that comes under technical analysis, but you don't need to learn all of these chart patterns to make money. There are very essential, very frequently used chart patterns. Those top 5 chart patterns what we are going to talk about today, and I'll explain those chart patterns. I'll explain the rules one by one, how you can apply the rules to these charts and how you can take trading decisions based on these chart patterns. That is what we are going to talk about today. Let's go ahead with this video. So we'll get started with the first chart pattern, which is double top chart pattern. Basically, double top chart pattern is nothing but it is a kind of a reversal pattern where you tend to see an initial up move in the markets and the market starts declining first, and then it tries to go up again to cross the previous peak, but it fails to cross the previous peak and starts resuming its downtrend. So double top chart pattern usually helps you to identify the reversals when a particular stock is going to turn bearish. That is what double top chart pattern is all about. So initially it will first form a first peak as you see in the chart, and then it starts declining and eventually it starts going up and tries to cross that first peak again. Then it will fail. So first peak and second peak, two different peaks are formed, and then market starts going down. So as you could see, there is a dotted line plotted which is called as a neckline. So when that line, which is supposed to be the support level for that stock, if that is broken, then we go short. If you're already long, you just sell it. If you're not, you can just short that particular stock and cover it back at the bottom. So in this specific pattern with double top chart pattern, what you can do is once the neckline is crossed, once it starts going down, you just short it and find out what is the overall length from neckline to the peak. So that overall length should be your target. So once that target is reached, you just exit it. So as you could see in this chart, I have mentioned the target. So initially, top one and top two, the first peak and second peak is formed, and the dotted line is the neckline. Once that is broken, we are just going to short it. And the target is nothing but what is the overall length from that neckline to top. So the same length, if it starts going down, we'll use that as a target and we'll exit it. And stop loss for that will be the top two, which is nothing but the latest peak. So that will be our stop loss, and target will be the same level once it goes down. So it will be morely like 1:1 risk reward ratio, where once the neckline is broken, we are going to short it. So the second one is the double bottom chart pattern. So it is totally opposite of what we have seen earlier. So with respect to double bottom, we just need to have an initial prior downtrend. So as you could see in this chart, before bottom one is formed, the market was slowly going down. It was in a downtrend, and initial down move, a bottom was formed, a support was formed. From there, from bottom one, it is trying to move up, and again there was a resistance formed, and it starts going down. So now when it resumes its downtrend, it is trying to break below the bottom one level and trying to go down below bottom one, but it couldn't go because more buying pressure came in. So again the stocks starts reversing and tries to go up. So two different bottom has been formed, bottom one and bottom two. And those dotted neckline that you see is the right neckline, kind of a resistance support. In double top, we use those neckline as a support level, but in double bottom, we use those neckline as a resistance level. So once that resistance level is broken, the market starts moving up. So which means that the bottom has been formed, the support has been taken by the stock. Now it will resume its uptrend. So this chart clearly explains you what I've explained now. So you need to have a prior downtrend, and then now once it forms a bottom one, which is the initial support zone, it starts moving up and tries to cross above the neckline, but it couldn't cross the resistance line. Starts going down and creates a new bottom, which is the bottom two, and again it couldn't break that support zone, so starts reversing from there. So two different bottom is formed, which is nothing but double bottom formation is formed, and then again it is trying to cross the resistance level, and this time it crossed that resistance level successfully and starts moving up. So just like how we used the initial approach with the double top pattern, we will use the same approach with respect to double bottom pattern. So once the neckline is crossed, so we'll just go long. If you have already shorted the stock, you can just exit it. If not, you can just go long. Once this dotted line, which is called as the neckline, if that is crossed, you go long, and the target should be same as whatever the overall difference between that neckline to bottom. What is the overall length? The same length we should use it for the target also. So you can use, once the neckline is crossed, you just go long with the bottom two level as your stop loss. And once you go long and once the market starts moving up, once it hits the target, you can exit it. So this is how you can trade with the double bottom formation. So it is almost similar to double top, where with respect to double top, you are going short. With respect to double bottom, you are going long. That is all. Now let's move on to the next chart pattern, which is totally based on price action based, where you are specifically focusing on a stock which is forming an uptrend. So for a stock to form a clear uptrend, this is the pattern that it has to follow. It should create a higher high and higher low formation. So from low levels, it has to move to a higher high level, and again it should retrace back, and again further it should start moving up, and again a higher low will be formed and a new high will be formed. So you can just scan for such a pattern in any of the stocks which you wanted to trade. If that is suitable, if you find any kind of that patterns with any of the stock, you can directly go long, and once you go long, use the recent higher low as your stop loss. And this one is just opposite of what we have seen with respect to uptrend. This is a downtrend chart. Again, it is based on a price action based, where it has to form higher high and higher low for uptrend. But with respect to downtrend, it has to form lower high and lower low. So those charts that you are seeing right now, which is now showing as LH, 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 LL, LL, is nothing but lower high and lower low. So once you see this kind of a trend with respect to any of the stock, it denotes that it is totally bearish. You can go short in that stock, or you can exit from that stock if you're already holding it. In case if you're shorting it, once it forms a new lower low, you can just go short and with a recent lower high as a stop loss. This is how you can trade a downtrend chart with this kind of lower high and lower low pattern. So coming to the last chart pattern, which is one of the most widely used chart pattern among most of the people who use technical analysis. This is a widely used chart pattern where they check for this kind of formation, where the formation should look like a left shoulder and a right shoulder, and in between it should be look like a head. So what it means is, when a stock is an uptrend, usually it doesn't go up in one straight line, right? It will go, sometimes it goes up and retraces back, again it goes up and retraces back. Likewise, during this uptrend, as you could see in this chart, an initial left shoulder is formed, and then stock resumes its uptrend, crosses above the left shoulder, and now tries to move up, but it couldn't move up and faces a strong resistance, which is formed as a kind of an head, and starts going down, and again tries to retrace back and starts moving up, but it couldn't get past the head level. So, and again a resistance is formed and starts declining. So when you observe this chart pattern, it will look like a kind of an head and shoulder pattern, where the between left shoulder and right shoulder, you will see a head kind of pattern, which is a bit higher than the left shoulder and the right shoulder. And there will be a neckline support, which is nothing but the trend line support. Once you draw the trend line, with respect to jointing all those support levels, you just need to wait for that support level to be broken. And once that support level is broken, you are going to go short in that stock, or you're just, if you're already holding that stock, you're just going to exit from that. And once you go short, you can use the right shoulder peak should be your stop loss. In case if the stock retraces back and starts moving up, once it crosses the right shoulder high levels and start moving up, probably the stock resumes its uptrend. That is what it means. But most of the time, once the neckline is broken, the stock might start going in a downtrend. So we have seen some of the widely used chart patterns like double top, double bottom, head and shoulder pattern, higher highs, higher low, and lower highs, lower low. So based on these chart patterns, I've explained how you can take trading decisions. But is there any way where I can easily identify these chart patterns? Like instead of me going through each and every stock, if there is any free scanner that is available where I can shortlist specifically based on these chart patterns. Yes, there is one free scanner which is readily available where you can go and scan for these kind of chart patterns on any kind of time frames which you wish. Let me show you that free scanner for you. So topstockresearch.com. So this is the website. This website provides you a screen, a completely free scanner for multiple kind of chart patterns. So the popular chart patterns as for Indian stock market. Once you scroll it, you would be able to see bullish patterns, bearish patterns, and also whatever things that I've explained, like double bottom, double top, head and shoulder pattern, higher highs and higher lows, lower high and lower lows. All these things are possible. So all you have to do is, when it is, say, suppose if you wanted to find a stock which belongs to double bottom, just click on daily time frame. So based on the daily time frame, if any specific stock forms double top or double bottom formation, just click on this. It would automatically show you the list of stocks which has satisfied that condition. That is all. So once you open that, you can, based on whatever the entry conditions that I have specified, you can just go long or go short based on the specific patterns. So this specific a screener, topstockresearch.com, is totally a third-party tool which is free to use. So whatever the patterns that you're looking for, you can clearly look based on whatever the time frame, whether if it is daily, intraday, weekly, monthly, whatever the time frame that you want. Based on that, you can click it. It would automatically show what are the list of stocks that is satisfy that specific condition. So this is what I wanted to convey in this video. Hope you found this really helpful. In case if you guys have any questions or any queries related to the chart patterns which you have discussed, please post it in the comment section. I'll address it. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.